Hey traders, the markets have been irrationally bullish here. Let's talk about it. We're going to go from the high level down step by step. First thing we're going to look at is the US 10-year bond yield versus the 2-year. As many of you, if you've been following me for any time at all, you know that the bond yield inversion is a significant issue as an indicator barometer going into a bear market or going into a major recession, economically speaking, with double-digit unemployment rate. I had these numbers crunched, and what you're looking at is the big black line is the monthly price line of the S&P 500, okay, the SPX. The blue line measures the 2-year versus the 10-year bond yield. And anytime this blue line goes under the zero line, that means you have an inversion. If you have an inversion, that simply means that the 2-year bond is paying more yield than the 10-year, which the 10-year should always pay you more than a 2-year term. So that's the long and short of it. What do we care about as technicians? We care about what the data says. So we lean into the data. So here's how you look at this. I had a red line plotted, the vertical red line plotted anytime we went lower. Now I didn't mess with the 80s, okay? So I'm going to zoom in just a little bit here. And anytime the blue line went under this zero line, or the horizontal red line, went below it and then corrected and it came back up, meaning there was no longer an inversion, we plotted a vertical red line. If I were to zoom in here, you would see this was the 2000 or the 1998 market drop here, which was a nasty little drop. This one that you see here, the next time we had an inversion, you can see it there, and we rallied higher, correcting. We were already at the beginning of the big technology bubble pop, the tech crisis, the tech pullback, recessionary pullback in the markets. Then it happened again, and you'll see a little drop. If I were to blow this up, it's relative, right? If I were to really blow this up, you can start to see, oh boy, you could start to see some of these drops, technology, but you can see this one. Do you see the drop that we got there? We got a drop here. This one comes up, we get 2 in a row. An M, do you see the M? M for murder. So we get 2 of these. We had 2 inversions, 2 corrections, and then we had the biggest recessionary pullback the market has seen since the Great Depression. So that was 2007, 2008. So 2007 were the inversions, 2008 was the huge correction. Now, zooming in here, taking a look, what was interesting is we had a little tiny inversion. A lot of people didn't realize this, but we had a little tiny inversion that happened right before this huge drop. Doesn't look big. This is a monster drop, guys. You know what this was? This was the Corona crash drop. Big V bottom. So we actually got an inversion right before that. So these inversions, once they correct, we're looking at an average of 100 days on average before a big major market correction takes place. We're looking at 1 to 4 months after the correction. Big drop can happen. We could already be in the drop up to 4 months is what the data is showing, with an average of 100 days. But what is interesting, guys, if I zoom out again, look how close we are to getting another vertical red line, meaning that our inversion is going to correct. Do you guys see that? The thing I want everybody to pay attention to here is that this is the deepest, longest inversion we have ever seen in history. So we don't know what to make of this yet. This has been the deepest inversion and has lasted the longest. So we don't know what that means for the market, how the market will handle this. All I know is if I blow this up, we had this big rally here in November, Santa Claus rally, right up to these highs that we had in July of 2023. We're right there. So the question is this going to be an M? It could be, or this thing could keep marching higher. But we need to look at more technical analysis on bigger charts, okay? So that's what we're looking at right here. Very big concern. Now, the other thing that I pointed out, and I want to show you guys, this is in FinViz, free site, FinViz. This FinViz, let me move this down so you can see it. So FinViz, and I'm in groups, so I clicked on groups. If you look at the 1 month, on a sector rotation, when you go into a market recession, energy gets really hot, technology gets really soft. Well, did you notice throughout the summer, technology is really soft and energy got really hot? Well, we're seeing the opposite happening right now, the last couple months. So technology got really hot, financials are up there fairly strong, and look at this, energy is at the bottom at this moment. It did an about face right in front of our eyes the last 2 months. If you look at a 3-month performance, energy has done the poorest. But look at this, technology and financials doing the best. Now, when you combine what's happened the last 2 months, it has flipped the script, saying that this, what we were looking at, certain market death with the sector rotation, is saying, wait a second, semiconductors with the AI is so strong right now, we're putting a ton of money into this. And sure enough, that's what we're seeing here. Fascinating times. I mean, big time curveball taking place. So if you look at the half month or the half year, you have cyclicals, financials, technologies there at the top, and you have your energy that's still up here at the top because it had traditionally for the last half year been very, very strong. So what's interesting is what's going to happen starting January. Will December be the start of the pullback, or will we see several more months before we start to top out in the market? So let's look at the charts to find out what we can surmise. Now, the first thing I'm going to look at, this is a monthly chart, guys. Every bar that you look at is 1 month. We're looking at the VIX, which is the fear indicator. The fear indicator, if you look here, we're below 13. There's no fear out there in the markets at this moment, but we are at major support. Do you guys see this? So I'm going to add a couple indicators. You can see the MACD is below the 0 line and crossing down. But that's the only things I kind of want to show at this moment. But if you go over here, look at this, we're at major support. So see these two support lines? If I go to a line chart, you'll see it. So support, we're coming across. That's where we're at right now. Will we bounce it? I don't know. Or will we go down to this low, which would be a crazy low area? It could do that. But if you look here, do you see how we're starting to roll over there? So this is acting like this wants to be an area of support. What that means, if this is an area of support, that means that if this VIX goes higher, that means there's fear in the markets. If there's fear in the markets drop, okay? That's something that we're looking at. If I look at gold and silver, which are usually defensive stocks, if you look here, look at how we have been breaking out of this big symmetrical triangle. Major rally to the upside, guys. Huge rally. So this is really bullish on silver monthly chart. Gold monthly chart, if you look here, it is the same. Very bullish. We're starting to get to these highs that we're seeing, so we got to watch out for this. But we broke over a major trend line here on the monthly chart on gold. So these defensive securities are being gobbled up. These commodities are being gobbled up. There's a huge demand for these right now. Let's look at US dollar. US dollar's under pressure. Last 2 months we have been dropping. But the thing that grabs my attention here, look at this, is the huge volume that we're seeing. So let me kind of get our things, but look at this massive volume we've been seeing the last 6 months, guys. That should be telling us something. That is very interesting. Big rising wedge, we're dropping, very bearish as a whole. But the thing I want to do is show you first. I'm going to skip up here to the monthly chart on the spider, okay? So the spider, we broke last month over this. We're still going bullish here. It's looking nice, but we're at this high. Do you guys see this? We're at this high right now. And the question is, is this high going to be a resistance and we're going to drop? And if so, will that give us a bearish death hook? Look that up on the Googler, on Google, death hook, bullish and bearish death hook. If that happens, that'll be no bueno for the market. It's like really big no. It needs to stay above this trend line at all costs. We need to stay above this. Do not want to drop back to below it, because that could be very, very bad. But we're up here near these highs that we got in July, and if we go over here to the diamonds up here, we're at these all-time high areas on the the Dow 30. So the Dow 30, we're up here. But look at this. If I go to a line chart, you'll see it. Resistance coming across. We're at major resistance, and see that trajectory up, and now we're starting to roll over. Do you guys see that? So if I go over here to this, MACD is above the zero line, and nothing to be said on bullish or bearish on the RSI, but all I know is we're at that area of resistance right now. So the question is this going to break out or break down? Sometimes we can look at the Qs and then the small caps, which is the Russell 2000, and then the financials. Let's take a look at the Qs monthly chart. If you look at this, we're just over the July highs, but look how we're starting to roll over. Do you guys see that on the month? We're rolling over right there after a big pop out above this. If I go to a candlestick chart, you can see the big breakout, and we stutter step for the month. Stuttered step. So that's where we're at right now. Stutter step. And so July, very, very big run. That's where we're at. Big, big run in July. So it's very, very nice. Very, very big run. And we're just getting started in December, okay? Just getting started, but we're pulling back. We have a lower high. Do you guys see this? Lower high, higher low. The S&P 500, I'm going to go back there real fast. Take a look at this. We only have one day in December in the book, so I just want us to pay attention to this. We do have a higher high. Do you guys see that? Higher high, higher low. So, but the NASDAQ, I want to point this out again. We have a lower high, okay? Now, what's the Russell's 2000 doing? Russell's 2000 gives us a higher high, higher low, but look when these trend lines plot. Look at this. If I go to line chart, you'll see it. We have support. Support now is resistance. We have a symmetrical triangle breakout. Now what was support is now resistance. Russell 2000 monthly looks like it's wanting to drop. We're at this 200-day moving average coming across here, or is that 200-day? Let me see, what is this? Oh, it's the 50. This is the 50 moving average acting as resistance right now. 50 moving average. But what's interesting is we're nowhere near the July highs. We're nowhere near the all-time highs. So the Russell 2000 is relatively much weaker than what we're seeing in the S&P and what we're seeing in the Dow. Much weaker, much weaker. And it's below support levels, below them. If you look at the MACD, we're below the zero line, showing weakness. That's a weak area to be if we stay below this line. Now, if we go back above it, that's a bullish death hook, and we can get really bullish for several months. We could just keep rallying straight up. But right now, we're at this point where you cannot be bullish going into the Russells being below these trend lines, all the moving averages going in. We had to sit through some bullish movement to the upside. We had to do that. But until it goes into this area, this apex, and until it can break out of these, this is a real dangerous place for bulls to be, because this could be major resistance area after this big run, especially when we go to these lower time frames and see these exhaustion runs that we're seeing. For the bears, painful to sit through, but we're playing the long game. We do not want to be suckered into a false sense of greed because of the recent run. By doing so, you could just have your head handed to you by the bears if they come in. I need to say that, if they come in. So you got to be protected in these areas. You got to be hedged, protected. You have to, play at a level where it's very, very responsible. You don't want to pick a direction here when we're at such a crucial area, technically speaking. Now, the financials kind of near the July highs. You guys see that? Kind of near these areas, or July highs. We're over the July highs. I'm sorry, July and August highs. We're nearing the January highs, but we have major support there, major resistance there. We're at that resistance. We do have a higher high for banks. So the banks, we're watching the banks. Will the banks break over this area, or will it hit its head and drop? MACD is trying to get over the zero line. It's over the zero line right now at this time, right now. So very interesting, very interesting to see. All right, so like I already told you, the US dollar is in trouble. Now we're going to go to a different time frame, the weekly time frame. So November is over. The weekly that we're going to look at, we're going to start with the S&P 500, and we're going to pull this up. Weekly chart. So last week we continued to march. We broke over the top of this spider on the weekly chart, and sure enough, we continued higher high, higher low. Look at the MACD starting to roll over. Do you see the histogram's getting smaller? The lines are getting closer together, and we're starting to roll there. We're near the high area, the RSI. So in other words, we had this big run. If the MACD rolls over and the RSI rolls over, that means the price is dropping. If the price drops, this will be a bearish death hook on the weekly chart on the S&P 500, and the markets will get very bearish and fast potentially. It is technically going to be a bearish death hook if it does that. So really interesting times. The diamonds, this is the Dow 30, big candlestick to the upside. Is this an exhaustion run? Maybe. And look where we stopped, at this red line. Well, what is that red line? It's these highs. If I go back here, we have resistance. We're at the resistance after a straight up run, busting through some major areas of resistance, and we're right there at it with a huge candlestick. Knocking at the RSIs right here at the oversold area. We're at a really high area on the MACD, can still definitely go higher, but this looks very and the volume last week, 2 weeks ago, was very small volume. This week the volume really picked up right and smashed its head right into this resistance. Here's the Qs, the NASDAQ, the tech stocks. This is ominous. Up, tweezer top, spinning top, reversal pattern, higher swing high. Do you guys see this with the red line? Lower swing high on the MACD. It's getting ready to roll over. Do you see this? And oversold on the RSI. This is saying that we could be at a top, guys. And if that is a top and we come back down, and this could crash hard and multi-weeks of bearish activity, multi-weeks, okay? So this is very important that the markets for the bulls, we stay above this area right here, maybe build a base. It has a lot of resistance over the top. The Russell 2000 is down, major rally to the upside. One thing I do want to do, I want to pull a fib here and just see what level we're at. And look at this, for the week we are over the 61.8. So very strong run to the upside. This is a symmetrical triangle. This is a bullish death hook. This is saying the Russell's weekly is saying we have a ton of upside opportunity, and this could rally the next few weeks. I know I'm sharing with you a lot. I'm just showing you the whole picture and not being biased. I'm showing you reality of what price action is showing us. So I want you to take note of this. It'd be helpful to rewind the video and take notes of each one of these. But the thing that I watch for, Russell 2000, and the financials, are they relatively weaker or stronger than the markets, and are they at support or resistance area compared to the rest of the markets? That's what I look for. So anytime I see the Russell 2000 rallied up past 61.8 Fibonacci and crossing over a lot of these moving averages and this major trend line and going into the apex and giving us a bullish death hook, woo, there could be some more bullish activity here. So what's the financial saying on the weekly chart? If you go here and say, how's that doing? Big symmetrical triangle, breakout to the upside 3 weeks ago. Last week we got over this high, we rallied higher. We do have resistance coming up here. We're marching up. the histogram is starting to soften, so we got light greens instead of dark greens. It's showing a slowing taking place. We're up here near the overbought area on the RSI US dollar weekly chart. If you look at this, we're just down, down, down. If you go to the gold, we're almost at a support level. If you go to the gold, big rally on the weekly chart. We're at these highs right there. You can see it. We're just past those, but we broke major resistance on huge volume. Guys, gold and silver have an upside opportunity. Silver, if you go here, big rally right in, but we have big time resistance coming across right here at this line. We're approaching this, but we broke this. When we broke it 3 weeks ago, 2 weeks ago, we rallied. Now we have gapped higher and running on big volume. Hope that's not an exhaustion gap. If so, that would be bad for gold and silver. VIX weekly chart is down, 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 down. For the week, we have a inverted hammer at a big area of support, so meaning that it's a reversal pattern. Is this MACD looking to roll up? Yes. Histograms are getting tiny, getting ready to roll. We're oversold. In other words, there is at all-time lows. This is not a time be loading up bullish because of what we're seeing here. Everything is looking like it's wanting to pop higher. Okay, now at this very moment of the video, it looks like Bitcoin is over 39,000. We're at 39,300. Now, daily chart, where we can go here and look at the daily chart. But I just don't want to spend a lot of time. The bigger time frames are much more important to me than the. Oh, hold on. Let me do this correctly. Than the smaller time frames. Okay. Now we can look at these, and I want to look at them. So we're gonna. Whoops. Hold on. I can move faster than my internet connection. That's my French. I'm Cajun, if you guys didn't know that. But check this out. The spiders rallied up to this resistance line, and then boom, powered through it, and then hung up at these resistance lines. Then boom, powered through it, rallied up to this resistance line, and boom, powered through it. And usually in a high base, we want to see low volume. We're seeing increased volume. That's not ideal for a high base. High base, you want to see low volume, and then on the breakout, big volume. I'm seeing an increase of volume and then big volume on that breakout of that line. We are extremely overbought right now. Overbought on the RSI. And the thing is, we have this. We keep making these higher highs. Do you guys see this? We keep making these higher highs. And we're making lower highs on the MACD. In other words, that's a bearish divergence. Very bad for the S&P 500. I'm just going to skip diamonds, go right to the NASDAQ. We're up. We break through resistance. We catch our breath above resistance, up to resistance. We gap past resistance, at resistance. We popped up. Now we're trying to catch our breath. You know, low base. Do we have low volume? We have increasing volume here. And so it's not ideal, but it is still a high base. We have the moving average acting support. We got a lot of support below us. Can the Qs rally higher with the being overbought? The answer is yes. Markets can do whatever it wants to at any time, and it does. The odds are against it to keep rallying up. It needs to keep catching its breath here to get the RSI relative strength to drop back down into this safe area, and before it can make a run again safely without being relatively too bullish. The Russell 2000, what's going on Friday? A huge rally on monster volume, a huge pop. Here's the question: is that an exhaustion candle? Is that an exhaustion run? A lot of times after an extended run, look this up, after an extended run, and then you get this big moves, just like an exhaustion gap. After a big run and a gap on huge volume, so you'll see a reversal take place. Smart money pulling in dumb money. That's what this looks like to me. Doesn't mean it's going to be, but all I know is I get this monster rally on small caps on Friday after an extended run to the upside up here in this relatively overbought area, and we get this huge pop just busting through a ton of resistance. Very powerful for it to do that. And the banks, what did the banks do? The banks have been on fuego. Up, high base, pop, a gap breaking resistance, up, 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 up on huge candlesticks, guys. If I show you the size, I mean, these are monster candlesticks. So the question is, are these exhaustion candlesticks? We're going higher, 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 but the MACD is going, whoops, lower, lower, lower. Okay, we're going lower on the MACD, higher on price action, and volume did spike this on Friday on financials. Just crazy move, guys, crazy move. It's this rubber band. It's going up, 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 and we are very overbought right now. So there's going to be profit takers wanting to come in and take advantage of this move. Let's take a quick break. Woo! I threw a lot at you. Let me sum it up like this. Guys, on the daily charts, everything looks extremely bullish, and it has been. November was the bullish, the biggest bullish move we have seen all year, right in the face of a bond yield inversion, right in the face of sector rotation, where energy was getting red hot and techs were taking a huge hit, and that was going to show the recessionary pullback. The bond yield inversion is the deepest, longest inversion we've ever had, and we're knocking at the door of correcting. And once we correct, then we are now set. 100% of the time we've had a market recession after an inversion and a correction with double-digit unemployment. The question is, what will happen now that we have the longest and the deepest inversion history has ever seen on the bond yield inversion? That's interesting. The next question is, when will energy start getting red hot again? And we are looking at the markets as a whole, all time frames. We are at a lot of resistance areas right now. We broke through a lot of resistance areas on other time frames. Pay special attention to the banks. Pay special attention to small caps during this, because they will lead the charge. The VIX is very important to me because that's the fear indicator. The VIX, the fear, because there's no fear right now, when there starts to get fear, you could see a very quick spike in fear come just rallying straight up into the markets, and that will put a wet blanket over everything that's on these highs, this euphoria that people are feeling right now. So what you need to be doing is playing at these levels, be looking to put stop losses in place if you've been long this. If you are thinking that the markets could drop, be looking to add more bearish positions at this moment, or wait to do that until we do start to get the correction before you do. We are overextended on the lower time frames, relatively speaking. So you can be hedged at this time, or you could be flat the market until the market makes its move to do so. Patience is the name of the game. In the world that we live in, patience is the name of the game. The weak-minded are those that are emotional, fear and greed, and they are not patient, waiting. If you haven't done so, watch the Big Short, the movie, and it's a game for the patient, because we know that the economy, the debt that we're dealing with, the deficits that we're dealing with, the global economic political landscape that we're dealing with, Taiwan is going to be a major issue in the next 2 years. I'm talking to people high in the tech world. I'm getting big into the AI world with some great connections from Google to NVIDIA. DeepMind. I'm connected with some high AI individuals, and there's just some concerns that are out there. Everyone's excited about semiconductors. You have Intel, you have AMD, you have NVIDIA, with the big ones to be considering if you like the idea of the semiconductors and AI and where we're heading going into the future. And I've been reading some things, and it is crazy. I can't believe you guys are still with me right now, but to be quite frank, if you go over here to the website Grok Trade, so I'm at groktrade.com, but in the bottom corner here, this bottom corner, you see, let me bring this down. You see Grok Girl. That's Grok Girl. And she right now says, hey, I'm crazy smart. And she is. Challenge her. Ask her about anything in trading. Ask her anything about the company or whatever. And she's your new AI trading friend. So if you need somebody to bounce questions off of on the trading front, she's been well trained. I trained this girl. So, ooh, don't say that to my wife. Anyway. What brings you here? Oh, and what's your current trading experience? The reason is like, what brought you here? So let her know that, so she has an idea why you're on the website. And then let her know what your trading experience is. She'll hone in on some things and she'll talk to you in a certain way and give you certain things. So she's very, very intuitive. This is AI at its finest. I mean, this is crazy. So go have some fun with her. Be polite to her. If you're rude, she might call you out. But people have asked some crazy things so far. I had people coming in asking about chart patterns. Hey, like one question was, if you have a death hook, does it only a bullish death hook, a bearish death hook, does it only work on symmetrical triangles? I thought, man, that's a great question to ask the AI. And asked, asked, just everything, to your religion, to just everything. You can't imagine. She has been asked a lot of questions. Go have some fun. People are enjoying communicating with her, and she's an amazing gal. She's a neat asset to this website. So it's cool to see her being a part of that. We just started our launch pad. We had week number 1. If anybody wants to get into that, just go to Grok Trade Launchpad. Actually, if you go to more here, see the 101 Launchpad, you can click on that, and I'll still let you in to the class. We only had one class. There's 5 classes, so we got 4 more classes, but I'll get you the recording of the first class. Feel free to come in. It's $5 a class. It's 45 minutes to an hour worth of trading education, and very, very, very valuable. And it has a course value of $500, so it's $25 for all 5 classes. We just do that so we don't have people signing up and saying they're going to be there and not show up. This is what the tire kickers are. We weed them out by charging $5 to walk in the door. So very, very beneficial. It was a great class today. There it is. Take care, guys. Share this video. Last video you'll ever see from me. If you don't subscribe, if you subscribe, you'll get. If you like this level of education, you'll continue to get it. Give me a like. It doesn't cost you anything to hit the like button. Just give me a like. Love your comments. And I didn't even know you could give money tips on YouTube, and you guys are starting to give me money tips. What? That is crazy. I'm just blown away by that. And just a big thank you. And Basket B, thank you for all the love you've been giving me. Very much appreciated. So there it is, guys. Take care. We'll see you guys later. Love you all. Bye. Guys, why are you still here? You just watched my video and now you're still lingering around. Might as well be with you now that I have your undivided attention. Listen, if you haven't done so yet, I highly recommend putting in a foundation of trading, your foundation of trading through a mentor. For learning to fly a plane, you wouldn't just go through ground school before you start flying in the friendly skies. What you would be doing, though, is going up first with your flight instructor. Same thing if you're going to learn to ride a bike, you better have somebody behind you helping you ride a bike. Surgery, you're not going to read a few books and do heart surgery. So every principle and with being guided by a mentor, let finances be this. If you're a trader, you from amateurs to professionals. Mentoring will do that for you. Anyway.